We got some great news this morning for UnitedHealth stock investors, and the stock is jumping by almost 10% on the back of this news. Of course, I'm happy about that because I've rated UnitedHealth stock as a buy all year long in 2025. Well, I shouldn't say all year long. I rated it as a buy after the stock price crashed, following some of the developments earlier in the year where the company had to remove its guidance, reduced the earnings per share and revenue expectations, announced that it miscalculated its cost, and all of those factors that caused the share price to crash. Following the crash is when I rated the stock as a buy, and the stock has been bouncing off those lows. And so I'm happy to see the price perform better since I made this recommendation. So in this video specifically, I'll talk about the news that's causing the share price to increase, and then I'll share with you the adjustments I made to my discounted cash flow valuation model for this company that lifted the intrinsic value per share or the fair value per share following these developments today. So let's jump into it after a brief message from my sponsor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so UnitedHealth Group was the best performing stock in the Dow index on Tuesday after the healthcare giant said that the vast majority of its Medicare Advantage enrollees are likely to qualify for bonus payments from the federal government. UnitedHealth made a regulatory filing on Tuesday and estimated that 78% of its Medicare Advantage membership would be enrolled in plans 4 stars or higher. So, Medicare Advantage is Medicare coverage administered by private health insurers rather than the federal government. It's been a major reason for UnitedHealth's rough year, as the company underestimated the cost to serve these customers by $6.5 billion. So the announcement that they would be getting a refund and that could alleviate some of those higher costs. So if you remember, shares of UnitedHealth suffered their worst day in 25 years in April after they cut their full year earnings outlook, citing heightened care activity indications in its Medicare Advantage business. In other words, people were seeking out healthcare more frequently. And of course, the more they utilize their healthcare, the more it costs United Health to serve those customers. And they underestimated how much people would be using their healthcare in 2025. And management estimated that they underestimated those costs by $6.5 billion. That's what led to the huge stock price decrease. So simultaneously, the healthcare industry and United Health in particular have faced increased scrutiny amid public outrage over high healthcare and drug costs, right? So despite the company reporting that they underestimated the cost to serve customers, which if they had correctly estimated these costs, they would have charged higher prices. So despite that fact, the public is still upset about their healthcare cost and the service they're getting. So Medicare Advantage plans with ratings of 4 stars or higher, which UnitedHealth did say that they qualified for, are eligible for quality bonus payments, which plan administrators can but are not required to use to lower costs or provide additional benefits to plan participants. The CMS is expected to distribute $12.7 billion in bonus payments to Medicare Advantage plans in 2025, and UnitedHealth will get a percentage of that allocation. So that's great news for UnitedHealth stock investors, which have been experiencing difficult times ever since the company reported and announced that they underestimated their costs. So the share price is soaring on the back of this news. It's up 9% today on the back of these developments. Of course, the company's 52-week low was $234. That's around the time when I was recommending this stock as a strong buy after the announcements of these revisions and the cost estimates that were missed. I told investors that the company made mistakes and that those mistakes were based on calculations on Medicare usage, and they can correct those mistakes starting in 2026. Because of the inflexible pricing policy, they weren't able to adjust the pricing in the middle of the year, but they can adjust pricing starting next year. And of course, they will increase prices and they will exit some markets and they will lose some customers as a result of higher prices, but at least their margins and their earnings will be better off after they increase prices. So after the adjustments following the announcement today, my intrinsic value per share for United Health stands at $451. And even after the 9% increase today, the share price at $348 remains undervalued compared to my calculation for the fair value of this business. So I will be reiterating my buy recommendation for United Health stock after this great news today. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.